It was a record-breaking week on Dalal Street. The market gained for the second straight week, and the sensex, in fact, recorded its biggest two-week gain since December of 2023. But it was the mid-caps that outperformed. That index has gained 7% in 2 weeks to post its biggest two-week gain in 3 years. BSE companies added a market cap of around 12 lakh crore this week itself. On this week's edition of the Editors Roundtable, we decode the week on Dalal Street, tell you all about Adani's cement play, put the spotlight on M&M's stellar rally, and tell you why diagnostic stocks are making a comeback as well. I'm Ekta Batra, and with me are the editors Anuj, Nimesh and Nigel. And also with us is Gautam Dugar, Head of Research and Institutional Equities at Motilal Oswal Financial Services. Hi guys. Well, before the markets, it's a long weekend.
Well, yeah, that's something to watch. We look forward to, right?
And for me, even longer because I'm then off for 1 week. So in that sense, quite good. And something, long weekend is something that the market needed actually.
Yeah.
Or all of us needed. This week was actually quite interesting because the Nifty was just stuck in a range. And Friday we had a bit of a breakout, but in individual stocks there was party out there. It's so just the left out feeling.
The portfolio guys are happy that at least the stocks are back. They're making good money in the individual names as well. So this was a week purely for retail and traders because a lot of momentum in broader market stocks.
Well, that's right. I think actually this week was practically one of the best weeks for your portfolio because the headline index didn't move much, but individual stocks did a thing of their own. Well, Gautam, welcome to the show, and thanks a lot for joining in. What do you make of the trading action that we've seen, and how are you approaching the markets at current reckoning?
I think we're back to the pre-election trend now. I think even the swearing in has happened, cabinet portfolios have been allocated, and you see continuity in every sense of the word. In fact, yesterday even they continued with the National Security Advisor, Principal Secretary to the Prime Minister, and now there is expectation that even the Lok Sabha Speaker will be the same. So literally when you look at March and now, you feel as if we are continuing from where we left, just that there was a 3-1 break of campaigning and elections. This increasingly seems like Modi 2.1 rather than Modi 3.0. And markets are also in a way recognizing it. After the volatility of last week, you're back to, as I think Nimesh was mentioning, this week's mid-cap action indicates that the sectors which were doing well prior to the elections, they continue to do well. There was just, I think, 1 or 2 days when the narrative around consumption stocks gained currency. Exactly. But now we are back to the familiar territory. You again saw defense stocks, manufacturing stock, railway stocks making new highs again.
Absolutely. Just to take that point forward, if you look at the chart and if you sort of just remove those 2 days, the exit poll day and the actual day, there's a straight line. Yeah. There's a line which is going on. And, if you were not there on the market those 2 days, you would have thought I've missed nothing, but actually so much happened. Let me just take you through this week, what happened actually. And as Gautam also pointed out, this week was all about momentum. While the index consolidated with positive bias, there was massive outperformance in the broader market. I was speaking to Manish Chokhani earlier. He was making this point that, look, right now there's momentum, but while large cap is undervalued, there's a bit of a bubble in mid and small cap, but nobody's caring right now. It's just too much money chasing that. And both Rhythm and Manish made this point that FIs want to buy, but the retail is not letting them buy. It's just no let up from the retail side. This week, the mid cap is up 3.7%, small cap is up 4.9%. And the clear theme was domestic economy, capital goods and industrials. Both of these sectors were up 6%. Realty was up over 5%. And the sector of the week, of course, defense, where stocks were up 10 to 30%. And coming to you now on this particular space, after Rajnath Singh's statement, we saw another leg up in the space. What do you make of it, and how do you approach stocks here?
So Anuj, can you guess what is the total domestic flows in the first 6 months of the calendar year?
Total domestic flows must be $30 billion?
Yeah, almost $25 billion.
Yeah.
You got $21 billion last year, full year. Prior to that, it was 32. So 32 plus 22 plus 25. So 2.5 years, you've received $80 billion of domestic flows. The corresponding FI numbers against that is 0.
Yeah.
Right? So 2.5 years, you have 0 FI flows in India and $80 billion in domestic flows. Now, a lot of these themes that you're talking about, they were in action even before the elections. Right now, you're suddenly seeing a policy continuity, political predictability. We all agree that this is the coalition government, but the anchor party has the highest number of seats in last 35 years, right? So if this political continuity and policy predictability continues, then I don't think the government is going to change the direction of its policy. Yes, there can be some tweaks around consumption, some populism, because government does have 1 lakh crore of extra firepower from the RBI dividend. They were budgeting for 1 lakh crore, they've got 2 lakh crore. Plus, they undershot the fiscal deficit target for FY24. I think it would have happened first time in last many decades. In an election year, the government has shrunk the fiscal deficit. Versus 5.8, they did 5.6. So they do have 1 lakh crore of firepower to maneuver and cater to bottom of pyramid, rural, before they head into the next round of election season in October. To address your query on defense and manufacturing, I think it's clearly people getting excited about those themes, building in next few years of earnings already, because there's no doubt that these are super expensive stocks now. Within the PSU, you still have PSU banks which are still telling you that valuations are reasonable. But aside of that, everything else in the PSU basket is looking super expensive.
But Gautam, what do you make of the thematic mutual funds which are getting launched, right? The manufacturing fund, now we have a defense fund as well, which is currently on. Right time to get into thematic funds, or it's too hot to chase those sectors now?
I think that depends on your time horizon, Nimesh, right? Do remember that last 1 year, the defense index, I think there is something called as Nifty Defense Index, has given 150% returns.
Absolutely. Oh, yeah.
Right? Last 3 years, many of the stocks are of 5x, 10x.
15 times.
Yeah.
Look at HAL and all that.
But look at it other way. You are an economy with a 5.1 trillion market cap and a GDP of close to 3.6, 3.7, which is headed towards 6 or 7, depending on which year you look at. If market cap tallies there, today you are 132% of the GDP insofar as market cap is concerned. Let's say you range around 120, 110, even if things cool down. We're still talking about 8 to 10 trillion dollar of market cap. So there are going to be multiple themes which will explode in the next 4-5 years. Multiple such thematic funds will be launched. Investor has to decide what his risk appetite allows, what is his time horizon. Because there are going to be n number of themes which will work in this market as you broaden out. You look at the pace of the primary market, the kind of IPOs which are going to hit you in the next 30, 60 days. So it's par for the course. A lot of thematic funds will get launched. In fact, your domestic equity AUM, which 10 years back was 1.5 lakh or 2 lakh crores, I think in 2013-14. Today it is touching 30 lakh crores.
Yeah.
Absolutely.
Right.
Yeah.
Absolutely. Yeah, let's move on then, and now let's talk about some stocks. Mahindra and Mahindra has been the stock of the year in terms of the index gainers. 62% this year. Nimesh has tracked this, and he's going to tell us what's led to this and what's M&M's top focus.
Well, I'm putting the focus on M&M for a couple of reasons. One, as you rightly pointed out, was the stock of the year. Today, in fact, M&M has overtaken Tata Motors in terms of market cap, so it's the second most valuable company. But more interestingly, for the first time, it's kind of a unique thing that M&M is doing an investor day across all the group companies. So, which is why I thought, let me put the focus on the M&M group. Let me just go to the wall and tell you what exactly the group has done over the last couple of years, and especially this year. So, look at M&M, the parent company of that group. This year, the stock is up. If you look at from market cap, the group has added nearly 3.5 lakh crore market cap this year. Last 1 year, the market cap added is almost 2 lakh crore. And in the last 3 years, they've added 2.5 lakh crores of market cap. So that's the overall M&M as a group, what they've done in the last 1, 2, and 3 years. So that's the market cap story. Now, this year, M&M has been the best performing stock. The stock is up 62% and has outperformed all the Nifty names. And, it's been the top gainer in the Nifty 50 as well. But if you look at the M&M group in terms of this year performance, in terms of stock prices, as I said, M&M was the biggest performer, up 62%. The other big outperformer is in Mahindra Logistics. That's up 21%. But the rest of the names, including in the Mahindra group, which is Mahindra EPC, Mahindra Lifespace, and all other names, including Mahindra Holidays and Tech Mahindra, they have just given single-digit returns as far as the stock price returns are concerned in this year. But again, if you look at 23 and the 3-year CAGR, all have done reasonably well in the M&M group. Now look at next table is the performance of the group in terms of top line. Between FY21 and FY24, across all the group companies, the top line has been quite strong. M&M from 74,000 crores to all the way to 1.4 lakh crores. So almost, it's been a massive jump there. Tech Mahindra also has done phenomenally well. So has Mahindra EPC, Mahindra Lifespace, and Mahindra Holidays as well, as far as the top line is concerned. But if you look at the EBITDA margin performance, there's been a mixed bag as far as the group performance is concerned. So if you look at the operating performance, Tech Mahindra has done reasonably well. Mahindra has been M&M has done really well. Mahindra Lifespace has actually lagged in terms of operating profit over the last 3 years. Mahindra Logistics has improved, and so is the case with the other group stocks as well. Mahindra EPC, Mahindra Financial Services, and Mahindra Holidays, they have relatively underperformed or has been sidelined as far as the operating performance is concerned, as far as within the M&A group. But the group has already shared the 5-year vision, and the big focus area, according to the group management, is been on Tech Mahindra, Mahindra Financial, which is M&M Finance, Mahindra Logistics, Mahindra Lifespace, as well as Mahindra Last Mile Mobility. So these are the 5 big companies that the group is going to focus on. And I guess that's what the management is going to speak to the analysts as well in today's Investor Day and Analyst Day. But if you look at, again, they've shared this chart across categories they've put out, which are the 5 or 6 companies where they're going to focus on. So M&M as a group has done really well in the last 1 year. M&M as a stock has done 62% return. But across the group, there has been a lot of underperformance in other group companies where the management is focused on. So need to see what they're going to talk to the investors in the Investor Day today. Gautam, on the M&M as a group, I know M&M has done really well. You guys covered it as well. But anything within that group which you think investors should watch out for now?
I think M&M itself.
M&M itself?
This is waiting to happen.
Okay.
A year and a half back, this was the cheapest auto stock.
Yeah.
Trading at 15-16 times core auto earnings. Yeah. This is the only four-wheeler we've been holding in our model portfolio for last 2.5 years. Right. Even today, it is still trading at 20-21 times and at a discount to Maruti. They've got their SUV cycle right. Yeah. You're just seeing early signs of good monsoons for this year.
Tractors may also do
Tractors is a low base, and I think they will get the benefit of operating leverage as well as the EV play. Right. I think the whole group has been under transformation after Anish Shah's arrival.
Yeah.
I think the next stock to watch out for in that group is Tech Mahindra. While a lot of people still have reasons for not being too bullish on that stock, and rightly so, because margins have really disappointed, but I think it has created a base for a spectacular rebound as you see more growth coming through in the top line for IT companies, especially large cap.
Okay. Well, Gautam, I'm just going to take that point forward from the table that Nimesh showed. One of them was M&M Finance. The stock has rallied, 17% last year, not moved too much this year. But do you think that theme is going to probably be something to look out for pre-election? The rural financing, the two-wheelers, the consumption pattern, probably on the rural end.
So I think I'll be more bullish on the housing finance theme.
Okay.
I think the first announcement after Prime Minister assumed the office was on 3 crore rural housing, or I think PM Awas Yojana. And you've seen those stocks, they're still very cheap. Something like a PNB Housing Finance, which again, incidentally, is part of our model portfolio, trades at one-time price to book, looking to do 2.5% ROA. Their legacy troubled book is hardly 3 or 4% of the total AUM. The AUM itself is growing at 15-16%, right? Two-wheeler, definitely. I think two-wheeler and four-wheeler both should do well. But I think the structural tailwinds are more for the housing finance stocks rather than the two-wheeler finance. Because two-wheeler, four-wheeler, all of them have seen last 2-3 years of very good sort of a cycle.
And I think for the housing theme as well, you have an upcoming IPO that's there, so that could have a positive rub-off. Then also you have the cost of funds that are coming down.
Absolutely.
And the third factor is it's another way to play this 3 crore houses that was announced. But let's talk about, to build homes, you require cement. So let's talk about the big cement deal then. Surprise, surprise. Everyone was wondering which asset is next on the block. Well, Penna Cement, that's the one that was on the block, and Adani Cements went ahead and picked up, that entire 10 million tons, which is moving to around 14 million tons for around 10,400 crores odd. Ambuja Cements is sitting on adequate amount of cash, so it's clearly funded via internal accruals. So give you a few numbers. Well, the capacity is around 10 million tons. There are 4 million tons that are in the works, so it goes to around 14 million tons. If you're looking at what it does to Ambuja's market share, well, the market share goes up by 2% pan-India. In the south, it goes up by close to around 8%. So that's good news for them. Penna brings a lot on the table, actually, because they have railway sidings, they have the waste heat recovery systems, they have the captive power as well. So that's good news. Moving to the valuations, which is all important, right? If you value the 14 million tons, well, that comes to around approximately $90 per ton. If you add the other 3 million tons that they're talking about, then it's 17 million tons, that comes in at around $80 per ton. The guidance that Ambuja has given is spectacular. They're talking about an asset that's doing 30% utilization level to move to around 85%. They're talking about a company that's doing less than 500 rupees EBITDA per ton to move to 1,500 rupees. So let's see whether or not they can achieve it. But they have proved themselves with regard to Sanghi. So the street is optimistic on these prospects as well. What is the read-through for the industry? That's important. You had stocks like Sagar Cement that did very well because it's a similar size and it's trading at around 50-55 times dollars per ton. So that's why that stock was one of them that are in focus. But there's a new challenger in the south now. Dalmia and Ramco have had it very, very easy for the last many, many years. Now suddenly you have a formidable player that's coming in there. So can they challenge or will these companies stand the test of time? And today we did see that both the stocks were lower, but they recovered intraday in today's session. Now, the other factor is consolidation is likely to continue in this space, but as Ambuja ramps up this Penna asset, it could put pricing pressure in South India, which in turn could bring further companies to come, for M&A. And a couple of assets that we just want to highlight, Vadraj Cement as well as Bima Cement, both of them have financing problems, so they're virtually shut. So both those two could get resolved at some point of time, maybe in the first half of this fiscal. And the other ones that the street keeps speculating on, Mangalam Cements, Saurashtra, India Cements. The street believes that there is a succession problem out there. So that's why these ones, will continue to remain in focus. Gautam, how do you approach this? Clearly a big asset getting gobbled up by a player that's showing aggression. And they're not stopping over here. They're saying we have $3 billion that we want to spend on inorganic growth. So 10,000 crores out of the way, but there's still plenty much in store. How do you approach this and what do you like?
So I think, this is definitely going to raise the competitive intensity in some of those markets that you just mentioned because you have a player with a huge appetite and a huge cash reserves. So they will definitely try to gobble up a lot of things because in the next 5 to 10 years, there are 3 big segments which will require consumption of cement. You have a big housing theme which we just discussed. You have a big capex theme which is playing out through roads, through infrastructure build-up. Everywhere you will need cement. So those who find capital goods, real estate stocks, a little more expensive, cement is a very roundabout way of playing the same thing. As regards what it does to the sector, definitely it creates more excitement in regional micro markets, and definitely the valuations of some of the assets which you just mentioned, which are in the process of getting bid out, I think there will be some interesting valuation play out
in the
there.
model portfolio within cement?
So we only have Ultratech because we are far more aggressive on the capex theme. We are playing it directly through the capital goods like L&T, ABB, Kirloskar Oil, and we are extremely bullish on real estate. That call has worked well for us for the last 2 years, and we still feel that some of the sectors like real estate, hotels, even hospitals for that matter, they haven't yet seen the full play of the cycle. And possibility of a cycle getting extended remains very high because now you have policy continuity and the same focus by the government towards infrastructure creation and capex spending. In fact, if you look at real estate today, even the quarter we just got over, the pre-sales growth, whichever operational metrics you look at, you've seen an upgrade continuously for the last 4 or 5 quarters. So while stocks are up 3 to 4x in the last 2 years, do remember that in the prior decade they did nothing.
Yeah.
So you had a 10-year of a down cycle, and so far you are in the 3rd or 4th year of an up cycle.
Okay, all right. Capex and infra is the big theme there. We'll take a short break on that note, but a lot more lined up on the other side. Stay tuned.